Hello and welcome to Crypto. My fucking god, what happened over the weekend? Damn, I was gonna do a spontaneous Sunday post yesterday, but to be honest, the prices were dropping so aggressively. This was all on news that came out on Saturday when the traditional markets are closed, leaving the brunt of the impact to happen on the crypto markets. And to be fair, I didn't really know what to expect when we woke up this morning. So I really did want to wait until Monday to see how everything was going to respond. Now, I just want to take this episode to dive into what the hell did we just go through? Because it was a major event and we want to understand why and what does this mean for the future of the industry? Is it so over? Are we so back? Maybe a little bit of both? So let's look into it. Okay, so in a nutshell, when I left everybody on Friday, we were still in this six-figure position, obviously coming down from a really nice 105, which seems to be sort of a top area that the market is comfortable trading Bitcoin at right now, between 105 and 100K. And then, of course, we wake up and Saturday starts this oh gosh, and Sunday was just disgusting. I mean, here we go, $92,000 bottom. And this was just Bitcoin. Obviously, everything else was amplified. Any sort of altcoin movement was in the 70%. We saw all the AI assets that I spoke about in the AI episode. Those things went down 70, 90%. These very quick trend meme coins just completely eviscerated. And this is all coming on the back of Saturday, Trump announcing the tariffs. Now, why does he do that on a Saturday? Obviously, with traditional finance, you can make these big claims, these large news announcements, and the market's closed. There's nothing to respond until it opens on Monday. Crypto's in a very different position. It's sitting there on the weekend. It doesn't have the traditional finance players to back it, so the liquidity is thinner. And that's why we generally see crypto trade poorly on the weekends versus the weekdays. Now, it was the only market open, and it's also on the higher end of the risk curve. So market blows the fuck up. And that's what we got. We got panic mode all around. Everybody thinking, man, I really should have sold my coins back in Christmas. I will say this is a great time to reflect if you really felt that you don't have cash for things you need. If you don't have the taxes from 2024 set aside in stable coins, don't ride this wave. That's going to make you want to put a gun in your mouth, and that is leading to a very unhealthy lifestyle. Now, beyond Bitcoin, we see something really interesting here in the ETH charts. Obviously, ETH not doing as well as anybody would hope, but there's just this moment here, this immediate decline, and this signals something to us, and that is that someone who was in a fairly leveraged position had to forcibly sell off their Ethereum, right? They just had no choice. They had to go boom and get it gone. And this had to be a lot of Ethereum, right? We're looking at 2,500 to at the bottom, getting to 2,360, right? So this is a price tanker. That leads us to think that there was a fund that was over-levered on ETH, thinking it had a great upside potential. A lot of this episode is on leverage, and this is why you don't want to use it, right? This is somebody that was poorly levered in just a precarious position, did not expect this Trump tariff news, which is something that he actually told us about when he was running, and they just got wrecked. He just got completely motherfucking wrecked. So that is all to say, why? Like let's look into the cause and the root effects of this. One thing that I think is really interesting is to look at the marketplaces that provide leverage. That is where these price moves are happening. I wish I could tell you that people were sitting comfy in spot, that people were just buying these coins, putting them into cold storage, but that's not the case. People are playing with perpetuals, they're playing with options, they're playing with these leveraged capabilities. And for better or for worse, the cryptocurrency industry loves to give out leverage at 50x, which is insane, at 100x, which is mind-numbingly stupid. The thing that you have to realize with leverage is that it reduces your wipeout moves. Again, if you held one Bitcoin, right, it would need to drop $100,000 to get to zero. You have a huge motion down. But if you 10x that leverage, that is taking that move and multiplying it by 10. All of a sudden, just a $10,000 move, boom, takes you completely out. Let's double that. Let's go to 20x leverage. All of a sudden, a $5,000 move, boom. Keep moving that up, right? You can get to points where you are putting your entire capital base on the line for moves that are very common within the industry or within an asset. And this is extremely dangerous because when you get liquidated on a leveraged exposure, it just takes your money. And what's beautiful about crypto and programmatic blockchains is that these rules are very transparent and they're upfront in the protocols. The protocols will say, if you hit this strike price, we take all of your capital and it goes back and it redistributes. So while this is truly something horrible to focus on from a user perspective and a reason why you should probably not be using leverage yourself, this becomes very interesting from a protocol perspective where those liquidations become fees captured by the protocol. Keep in mind, these are autonomous pieces of code. I found this post from Leo Escobar to be really interesting. Today, AAVE experienced over $200 million in liquidations within 24 hours, the largest event since 2024. This represents roughly 30% of all liquidations since AAVE's inception. 30% of all liquidations. AAVE's been around, guys, for a very long time. And even more impressively, bad debt actually decreased. So that's actually really good. We want that bad debt gone. This suggests that our DeFi ecosystem is built on strong foundations. And this is true. AAVE is just proof in the pudding that these DeFi protocols are resistant to these giant swinging moves. AAVE has resisted numerous bear markets. It survived the FTX collapse. And believe it or not, this was bigger than the FTX collapse. What we saw yesterday, my God, this is Ben Bybit, the head of Bybit, a major exchange that does a lot of leverage trading. I'm afraid to reveal that today, real total liquidation is a lot more than 2 billion. By my estimation, it should be around 8 to 10. What he's going on to say here is that the reporting mechanisms for liquidations, they're set to really only reveal a certain amount of info, right? It's just push messaging, and they don't want that to DDoS their systems. So of the 2 billion that's advertised publicly, it's the tip of the iceberg. He's saying 8 to 10 billion. FYI, Bybit liquidation 24 hours alone was 2.1. It's just nuts, and we're seeing it across the board. And of course, while a lot of these liquidations are largely around stable assets, I mean, we're seeing the decline of some of the latest and greatest assets like Mania. Now, what gets to be interesting to me here is that these Binance listings are performing very poorly. But all of these assets were available on decentralized exchanges at much cheaper values prior to their listing. So to me, there's some silver lining that we can actually see DEXs becoming initial listing platforms. There's no permission on a DEX. A coin can just go ahead and list itself. Now, they're responsible in many ways for the performance of the asset, but this is very bullish to me. I want to see decentralized exchanges and on-chain transactions increase. It's much more interesting to me than the centralized exchange play, which is not Web3. It sells Web3 tokens, but there's nothing crypto about it. There's no blockchain element. It's just coins that exist on blockchains. So there's always something interesting to take away. Now, I want to hop over here to this Milk Road post because they just do such a good job at summing up what's happening. And of course, there's the what the fuck happened. So we had, just to re-summarize, 530 billion wiped from the crypto market cap in 24 hours. That's 2.2 billion worth of liquidations. We already know it's much higher than that, right? It's closer to the 8 to 10. These liquidations are higher than the worst days of FTX, Luna, and COVID. Guys, these are nuts. I lived through FTX. I lived through it all. To me, the worst that I've ever experienced was May 20th, 2020, the COVID crash. It was over 50% of everyone's portfolio, just watching it disappear. But guys, we're seeing a competitive number. I mean, this is just blowing things out of the water. And I was trying to do homework yesterday. My wife kept asking, what was down. I didn't tell her about these markets. It was hard to bear. Now, of course, there's a lot to unpack here. So this all comes down, and Milk Road does a great job explaining that it's about the trade wars. And why is it about the trade wars in this announcement? Well, so it happens to be that trade wars and tariffs increase inflation. Increased inflation means smaller monetary supply. Less money in the ecosystem means less money coming to crypto. This is why the money printer going bird, or in quantitative easing, became our meme, because money was being printed, put out into the ecosystem. People were very happy to toss it into the crypto environment. Now, as money gets removed, people become worrisome. You have to think about your taxes. We have higher prices for eggs. There's a lot of things to spend your money on that have real impact on your life, and not these digital memes and coins and things of the future, right? So all of this really comes to a fruition. And of course, the timing just slammed crypto on the weekend. Basically, everyone took their risk on plays. Now, the reasons I talked about liquidations on leverage is because a lot of people are using this leverage to go long or short. And as I mentioned, just a tiny move can take 100% of your underlying capital. This is why you really don't want to put significant amounts of money on leverage. But what happened is crypto is the only market open on the weekends. You have these giant market makers, these guys that supply liquidity to both sides of a market, right? A Bitcoin USD market has Bitcoin and USD. There are giant teams out there that are balancing this. They're buying Bitcoin, they're buying USD. They're making sure that the market has padding. All those little numbers you see in an order book, that's them placing it so that people don't cascade prices and that there's a healthy metric. There's a lot of money to be made by this, and these are experienced guys, right? They've been trading high frequency. They have bots. They have amazingly fast internet connection. This is their bread and butter. They see the risk coming from the tariff announcement. They begin to dump some tokens. This in turn causes people that are leveraged long on 50x, 100x, 20x, 10x to get liquidated, right? They lose their money. Then this causes a cascade. People start to see their longs are approaching the bottom, right? They're going to get liquidated, so they've got to sell the cryptocurrency. It creates a flywheel effect, and these market makers who initially start this cascade can at some point sit back and just kind of watch it take over. By the end, when things start to even out and that fear, panic, and doubt, that FUD begins to subside, they're able to come back in and begin to buy those assets at a much cheaper price and take those gains basically in one day, which is what we saw on Sunday. So this is all to say, be very careful with leverage. It's not really a great way to trade. 95% of traders lose their money. And who are you losing it to? These giant Wall Street market-making types that are really the antithesis of what we've wanted out of the cryptocurrency space. So be careful. Don't go too heavy on leverage. Now, the crazy thing is that the markets opened again on Monday. Everything seems to be pretty okay because we've had some decent news coming back in return, and Bitcoin's already back to $101,000, 630 cents. I mean, that's like absolutely crazy. Of course, Trump also gets this message from Mexico that says, hey, we're going to send 10,000 troops to the border. We're going to stop illegal immigration. We're going to stop the fentanyl trade and pause the tariffs. They got a tariff pause. So holy moly, did like old man Trump and his crazy, crazy ways actually win? Was the trade war so fucking effective that it just had to last one day? I mean, these are the things that we're waking up to. Now, there's this really interesting post from Bitwise, a more sophisticated fund in the Bitcoin and cryptocurrency space. And they say that these tariffs are basically the greatest trade to happen to Bitcoin in a long time. What he basically goes on to unpack, and I will share this, is that Trump's ultimate goal is to devalue the dollar, that lots of our partners hold the dollar. And what he says here, and I'll put this in the description so that you can read it a little bit deeper, is that the US is in this position where the dollar is the most trusted asset in the world. This means that other countries, other people out there, they want to hold the dollar, right? It's their safety cushion. It's the thing that they want to hold on to. This makes the dollar actually inflated in its value because it's more than just a dollar. It's a proof of trust. And that also means that the US then has to ride a trade deficit, right? How are they going to get these dollars to hold in their coffers if we don't sell them dollars? So we're operating in a trade deficit. It's here called the Triffin dilemma, that whoever has the strongest currency needs to operate in a trade deficit. It's the only way their currency gets out to everybody to provide this robust store of value nature. And that is not positive for the US right now. What he's turning around and saying is that basically the US is going to enter a new world order, saying that there's more than one power. We're not interested in hegemony anymore. We're not going to be the world's policeman, and that we're pulling back and we're thinking what's best for America. You could say it's America first or whatever. But all of that is to say, his goal is to reduce the value of the dollar so that all of these people holding dollars, they have less value going on. They have less capacity to gain dollars. It becomes harder, right, as it kind of solidifies around the core base of the United States, and that they're left with these funky currencies. And they're looking around and they're going, we don't really love our hyperinflationary fiats. We want to buy Bitcoin. That is what Jeff is positing is going to happen in the long term. Now, mind you, he posted this over the weekend when the price of Bitcoin was collapsing and people go, well, these are at odds. Jeff is looking at something that is on a longer time frame, while what happened over the weekend, as we can see, was damn near immediate. So this was all nuts. This is an interesting concept. I honestly don't know enough about economics to tell you this is a great idea or not. I just want you to be aware that Jeff trades Bitcoin professionally for a company called Bitwise. He is posting his bags here, so take it everything with a grain of salt, as you always should. Start with skepticism and unpack backwards. So this has just been a really crazy trip, guys. We saw a weekend of huge price swings. A lot of people that were levered up lost their money. In fact, it's looking like maybe all of them, this was a bigger financial collapse in terms of liquidated leverage than we saw from FTX, from Luna, and from COVID. That is nuts. Those are huge world events. And this was worse. That tells me a couple things. It tells me that there's way too much leverage in this entire ecosystem, that people just don't want to buy these coins and hold them. They want to 10x them. They want to gamble. They want to get crazy. It also tells me that some great coins to hold might be ones that source their revenue from liquidations. So look at AAVE DAO, like I just described, the AAVE token, a lending borrowing platform. All the liquidations come back to the token holders itself. Hyperliquid, obviously, Bybit does it. That would be an equity play. And there's a couple others. Jupiter Exchange, to some degree, is another one that likes to buy back its tokens. So if you do want to look at an interesting token play, I'm just going to say it's obvious that one of the best cash flows in crypto is motherfuckers getting liquidated. And if you can figure out how to make that money go from their pocket to yours through really nice token economics and design, I say go for it. But for the meantime, this is like a very chaotic event. I'm long-term bullish Bitcoin. It's hard for me to say that with the first positive crypto presidency that we should expect these crazy downturns, but obviously crypto is the first mover when risk comes on, and risk came on hard last weekend, so that is scary. Now, I will leave you with one piece of bullish news, positive news, coming from Jake Cervinsky of the Blockchain Association. He is a lawyer in Washington that works very closely to all these things around regulation, and he says huge change at the SEC. Gensler's harassment campaign only worked because crypto companies felt obligated to respond to requests for information since refusal meant a subpoena. The change here is that under Gensler, basically, if they requested info from you, which could be scary, right? You don't know why, they could subpoena you immediately after if you rejected their claims. The change that happened right now, and this is significant, it says that lawyers at the SEC have been told that they need to seek permission from politically appointed leadership before formally launching probes. So that means that this blanket of fear, where the SEC simply requests information, you say, am I going to get indicted? Now there is a ladder of command, a chain of command. They actually have to ask an elected official, and this puts a lot of steps in between any sort of activity, request for information, and an indictment. This is to say that we're maturing, that the SEC no longer has carte blanche to assault the cryptocurrency industry, and this should be extremely positive for everyone building in the space. So with that, guys, don't go leveraged, and good luck out there. I'll see you tomorrow.